Righto, so it looks like all those that are here, so we may as well get going. So righto guys, so let's just rocket through these. Financial planning for the year ahead. So yes, I'm based in Gympie delivering the Business Leap program, and we help all sorts of businesses, large and small, micro, just starting out or have been around a while. And if there's advice or suggestion that we can't provide to help people, we're pretty earnest in finding someone else that can provide the advice. Having been self-employed myself on and off for 30 years, I understand how challenging it can be to get answers that you need to make your business successful. So one of the things that we've liked to focus on for the last 3.5 years is helping people find those answers, because it's horrible to feel alone in business, and in this day and age there's no reason that should happen. Okay, we are going to record the webinar, so it'll be available later, and Eden's turned off your cameras so that if you're hiding from someone, they won't find you. Okay, so the Entrepreneurship Facilitators program, the Business Leap program, is a free service funded by the Australian government, and it's there to help people start their own business and create opportunities for self-employment. As I say, we're delivering across the wide Bay Burnett, but we never refuse help to anyone regardless of where they are. Okay, so we can assist aspiring entrepreneurs, people like some of the folks on the call here today that are starting their own business and are wanting to create employment opportunities for themselves and others. Small business owners, they might have had a business that's been working for a little while and they want to grow and expand the business. And particularly those people that are at structural risk of unemployment in the community, because there's some massive changes going on in industry, and that's creating both consternation and opportunity for people. So righto, so the aim of this workshop is to help you with information on preparing your financial information for your accountant. It's ensuring your tax return is going to be as accurate as it can possibly be and be prepared on time, and making sure the process is as painless as possible for both you and your accountant. And I had another couple of notes. One of the other things is that it's also about helping you get your tax right the first time, and also maximising your legitimate deductions so that you can keep money in the business so that you can grow the business. Okay, now a disclaimer here, I'm not an accountant or a financial advisor. I did study accounting many years ago when I was at college, but I'm not a registered financial advisor or accountant, so I can't give specific advice. The advice is very general in nature. You'll hear me mention the word accountant quite a bit today, because my humble opinion is they are a very, very important part of your business. I'm not saying you should talk to them every day, but I really encourage people to have a working relationship with your accountant, because they're the folks that are going to help you avoid any nasty interactions with the tax office. They're going to give you quality advice on business things that you should be doing. And general advice around day-to-day operations and how to assess new business opportunities. Righto, so let's get right into it. Okay, so let's talk about all of the income. So as a small business owner, there'll be a raft of, hopefully there's a raft of income that's coming in, and some of it will be from business operations, and some of the income that comes in might not necessarily be earnings. Okay, and if, like most small business people, your business idea is a side hustle that you're using to start and you still have paid work, we need to keep a record of all the income that comes in, and you've got to furnish that to the accountant. Now, the reason I encourage people to keep a jolly good record of all the income that comes in is so that we've got full disclosure when we're talking to the accountant. So to give you my example, okay, I'm not here to tell you how good I am, it's just a nice little practical example. At this stage of my life, I work for the Business Leap program a couple of days a week, so I've got PAYG earnings there. My wife and I have a small farm that generates a little bit of income each year, and we've got to include that information to our accountant in our returns. And additionally, I do a little bit of consulting for farmers and land managers. So I've got 3 sources of income that are coming in. And I give all of that information to my accountant in vivid detail. Also, because our farm business is registered for GST, I have to do a BAS return 4 times a year, and sometimes I get money back. I've paid GST where I've paid the GST. Yeah, I've paid the GST, I haven't collected any, so that money gets refunded to me. Okay. Now, some of the income that we have, the tax office doesn't want to know about, but I'm not going to take the chance on that. I like the accountant to be in charge of that, and he'll sit down and explain to us, you know, of all of the income that comes in, this is the stuff that we have to report to the tax office, this is the stuff that we don't. I don't want any small business person taking a chance to underreport or not report in error, because the last thing you've got time for as a small business person is anyone from the tax office to come knocking on the door and say, can you please explain to me why you haven't put this detail in, or why you haven't included this income. Okay. Just checking my notes here. For some of you that are starting out in business, you may or may not be aware of what happens with GST. So unless your business is earning over $74,000 or $72,000, you don't have to register for GST. Okay, I heartily encourage people to do so, because the money that you spend when you purchase things that has GST in it means you can get that GST money back. And goodness knows, when you're starting a small business, money's a very scarce resource. So if you can maximise the ability to keep it within the business so that you can go and invest it in the business, that's going to help you on your road to success. Okay. One thing that you need to consider, and this happened to us a couple of years ago, we had some farm equipment that we weren't using anymore, and we'd kept it in pretty good order, but we'd written it off, so we'd been able to depreciate it down to 0. We sold it. I think we got 2 or 3 grand for that particular piece of equipment, and we had to report that to the tax office, because as far as they were concerned, that item was worth $0, but we sold it and made some money on it, so therefore we had to report that because it was a taxable item. Now, for a lot of you folks that are very new to small business, that won't be something that concerns you, but the emphasis that I have is just disclose all of the income that you have to your accountant, and they're the ones that can make the decision whether it's included in the return or not. Now, I didn't mention at the beginning, but please, if you take notes as we go through, we're going to have we're going to have plenty of time at the end of the presentation where I can answer any questions that you've got. And please, I don't care if you think the question's silly, I'd really like you to ask it, because some of the silliest questions some of the questions people think are silly are often the biggest learning opportunity. So please don't be afraid when we get to the end of the slideshow that we'll have a discussion. Righto, where are we here? So righto, so let's talk about debtors. Now again, this may not affect any of you that are new to small business, but if some of you have been there for a while in small business, it may well affect you. And it really depends on how you're accounting for your income. If you're using cash accounting, debtors aren't really as much of a problem as if you're doing accrual income. So the difference is, if you're doing cash accounting, you record the income when it comes in. If you're doing accrual accounting, you record the income when you invoice for it. Okay, so it mightn't sound much of a difference, but it is. So if you're doing cash accounting, debtors probably aren't a big problem, but if you're doing accrual accounting, they can turn into a bit of a nightmare. And the fact that we've got to disclose this to the accountant is, if you're working on an accruals basis and you've got some large debtors sitting there, you don't want to pay tax on money that hasn't come in, okay? And the fact of the matter is, if you're running debtors, it's probably not the correct terminology, but the fact of the matter is you've given that customer a loan. If you've gone and done a heap of work for someone and completed, a project or made a piece of equipment or you've made something, you've delivered a good rather than a service, or even if you've delivered a service, and they take their jolly merry time paying you, then that puts you in a spot. You've put in the hard work to earn that income, you've delivered the product, the customer's been happy with it, and now they're taking a hell of a long time to pay. Okay. One way around dealing with debtors is to have a very, very firm policy within the business that people are made aware of before they sign up to purchase something from you, that if you do offer credit or debtor facilities in your business, these are what they look like and these are the rules. I'd heartily encourage most small business people to not have debit facilities, because it's too tenuous. You really need to be paid on the day that delivery occurs, or better yet, if it's a long-term project, if you're doing something like website development or marketing campaigns or training for people, you may well have a series of payments that, when they first engage you and everyone's agreed on what the product is that you're going to deliver, there'll be a proportional payment. Then halfway through delivery, we might say, well, we want another 50%. And as you get a bit closer to the end, you may ask for everything at once or stagger the payments, because the last thing you want to be is stuck there with no income after you've delivered something. Okay? And again, getting quality advice from your accountant with regard to debtors is very important. If you want to have a look at some possible policies, business.gov.au is a very, very good source of policy templates that you can use so that you can write some policies for your business. Now, a bit of a side information here. If you're the person running the business and there's no staff, it's probably no big deal, okay? But if your business is going to grow over time and you're going to have a handful of employees, we want to make sure everyone's on the same page. So having written policies that clearly state how the business functions when it's working with customers, when it's working with suppliers, in the way we operate the business, they're very, very important things. And finding the business.gov.au website will have templates that you can use. I'm pretty sure they're free. I haven't looked at the page for a couple of months myself, but it's got templates in there that you can use to cut and paste and add information about your business, and it'll give you an idea of what those policies should look like. So business expenses. So this is this can be a bit of a murky one, and it's a bit of a national sport in Australia that we like to really load up our business expenses to reduce our taxable income. My humble point of view is any money that you expend to operate the business or to deliver the services or produce the products that you create for your business is tax deductible. The important thing here is that we keep good records. Now, for those of you that are very new to business, there's a couple of things you could do here. You could go out and find a very, very inexpensive yet quality cloud accounting program. And I understand that a lot of the cloud accounting programs have the facility, whenever you receive a receipt or an invoice or something, you can just drag and drop that invoice into a spot in the cloud accounting program and it's recorded forever, which is wonderful, because then it reduces the risk of you losing paperwork. Another option is, and we do this for our work here, is any time we expend some money, if we're out on the road seeing people, we just whip out the phone, take a photograph of the receipt and email it off to head office. So all of a sudden we've done away with the need to maintain paper accounting. If you're a little bit old-fashioned like me and you don't mind doing a bit of paper accounting, I heartily encourage you to get a very small filing cabinet. I encourage you to have a hanging file for each month, And whenever receipts or invoices or paperwork comes in that you need to share with the accountant, you've got a hanging file for each month. And it's a nice, simple, mechanical way of keeping everything neat and tidy. Often we've sat down with people to talk about their business finances. And without being critical, you know, you look like a cyclone's gone through their office because there's mountains of paperwork, there's mountains of work, there's mountains of receipts, and it's a bit of a dog's breakfast. The biggest favour you can do yourself when you're starting out in small business is develop a process or a procedure where you manage your business paperwork. You keep your expense records, you keep your income records, and you keep them separate from all the other things in life that go on, because this will make the process of getting your finances ready for the accountant at the end of the financial year, and also helping you become the sort of business person that regularly monitors your business expenses and your business income. It'll help make you a better business person because you're very neat and tidy in collating the data. So the business expenses. So we want to keep a record of everything. We want to keep a record of everything that goes on there. There'll be some situations. So when I'm not, when I'm doing the farm work that my wife and I do for our little farm, we use our vehicle in that business, and because we do that, we are allowed to claim a proportion of our vehicle as a tax deductible expense. Okay, now there's a few ways you can do this. You can keep all of your records for your vehicle over the course of a year and talk to the accountant and decide, well, how much vehicle usage is attributable to my small business. Now, in my situation with our farm, probably, you know, 15, maybe 20% of the total vehicle usage is something that we can claim. Okay, so we keep that record, and when we tally up our figures, we've got a total vehicle expenses of probably 10 grand for the year. So we know that $2,000 of that is deductible, and we've kept good records about that, so it's not up for debate. I heartily encourage you to keep good mileage records about how many kilometres you do in the vehicle rather than just guessing. There's plenty of technology that you can get. You can get apps on your phone that'll talk to a device in your car to record your vehicle kilometres, because it's very important we keep good records. There may be some expenses that you're not really sure about. Now, I haven't done this myself, but I do know that there's a facility within the tax laws that if you're operating a business from home rather than an out-of-home premises, you may be able to claim some of the electricity and even some of the insurance that you spend to, you know, keep the power on and keep the home insured. Again, that's something you want to have a talk to your accountant about. I do know that if you have a uniform or you do work in clothes that aren't normal casual clothes, you may well be able to claim a proportion of your washing machine and your washing expenses a year. And while it might sound trivial, you know, for a lot of people it might only be $400 or $500, the whole point in here that we're talking about is I want to help you maximise your deductions so you're keeping money that you can use in the business to grow the business. Because as I said earlier, the challenge that we all have in small business is keeping enough money coming in so that we can make the business successful. Righto, now another one that is very, very important, but it's often overlooked by most people, is this thing called depreciation. Now, from what I've heard with most of the folks that are on the call today, because they're in a service industry, they're not in what we would call manufacturing. It's probably not a big deal, but if you're in the business of making things and you have equipment, the tax office allow you to write the purchase of that equipment off over a period of time. So for argument's sake, if I went out and bought a new tractor and it cost $100,000, I would be allowed to depreciate that at probably 10% a year. So every year I can write off $10,000 as a tax deduction. And at the end of 10 years, as far as the tax office is concerned, that tractor is worth zero. Okay, it's probably not worth zero, but from a tax point of view, it's worth zero. So I've been able to depreciate it over that time. Some study I did overseas years ago, there was a financial chappie who was leading that class, and he made the point that really when you're in business, depreciation's all very well because you get a deduction. What you really should be doing is putting aside money each year so that when the time comes to replace that piece of equipment, you've got the money there. So it might not be a discussion for this group today, and I'd be happy to have a chat with anyone about it, but depreciation is something that it can work for you or it can work against you. It just depends what your business is. Okay, here we go. So righto, let's have a, where are we going here? Let's have a quick chat about maximising our deductions. Okay, now the beautiful thing about the tax law in Australia is they will let you pay for expenses in advance. So if any of you on the call today are in the very lucky position that you've had the best trading year ever for the 2021-2022 year, and it looks like you've made a hellishingly large amount of money over and above your expenses, and you might be up for a bit of tax. Let's talk about some of the legitimate legal things you can do to minimise the amount of money that could go to Canberra. So one simple thing you can do is prepay expenses in advance. And I believe, again, your accountant will confirm this or not, but you can prepay expenses for 12 months. So I'll give you another little example. Our phone bill for our business at home is around about $200 a month on average. Okay, so that's $2,400 a year. If I felt so inclined, sometime in the next 3 weeks, I could go into my Telstra account and I could pay, you know, $2,000 or $2,400 into that account to prepay my phone bill for the year ahead. Okay, and it's quite legal to do so. It's a legitimate way of reducing your tax going forward. I will caution people about doing this though, because if the situation is that you do that, you know, let's say your phone bill's $200 a month and you prepay $2,000 or $2,400 because you want to reduce your tax, that there's an opportunity cost to that. Let's say we get into September or October and you need a new computer, or you need a new piece of equipment, or you need to go and do some training so that you can deliver something else in your business to get a better outcome from your clients, and there's no spare money. The money's gone. You know, the budget's very, very tight because we're starting out and we've put together a very good budget. We didn't leave a lot of room, but there's no wiggle room. You prepaid that $2,400 to reduce your tax, which is great, but then you're stuck, because you can't go ahead and take this new opportunity that's come along. So I urge you, if you're going to use that as a method for reducing your tax, you want to have a pretty good plan for the next 12 months so that we don't get any nasty surprises. Okay, so there's one thing you can do with maximising your expenses. We can do it with phone bills, we could do it with electricity, we might be able to do it with our insurance. We could do it with our rates. Anything that's a recurring expense that you're paying on a regular basis and you can legitimately show, that's well and good. The last couple of years in Australia, the government's been extremely generous because they've allowed us to do instant asset write-off. So for those of us that needed new equipment, instead of depreciating it over a period of time, we were able to go out and claim it as a full deduction this year. And some friends of mine that live down the road, what were they doing? They bought another property somewhere and they needed a new set of cattle yards for their little beef herd, which was good, you know, and they were a lovely set of yards. It cost about 20 grand. And the good thing, they were able to claim that as a write-off in 1 year. They didn't have to depreciate it. So that helped them. So again, if you're going to need equipment in the year ahead, now's the time you're wanting to be thinking about that, and you need that little bit of advice from the accountant, whether it's something that we can claim immediately and get the money back, or whether we have to depreciate it over a period of time. Little things like, keeping the stationery cupboard full, that's always good. Bringing forward a car service, that's always a good way of maximising your deductions. Do you need any new software or hardware in the office to deliver what you're doing? Is there a training course that you want to go to in the next 3 or 4 months that you might be able to prepay that in advance? Okay. Again, it's very easy to talk about it, but you must have a good handle on what the next 12 months is going to look like, because I don't want you to cut yourself short for the new year if you're going to need money, but you've sunk it all into reducing your taxation for this current year. Very good. Let's have a look. So let's have a little chat about superannuation. And again, as I said at the beginning of the call today, I'm not a financial advisor or an accountant, so it's just general advice that we're sharing with you today. The good thing about being self-employed in Australia is that the tax office will allow you to claim as a full deduction contributions you make to super. Now, I've met a hell of a lot of small business people over the years, and some of them have got extremely sizable businesses. But when you talk to them about superannuation, they get a little bit sheepish, because it's not something that they've thought a lot about, and in a lot of cases, it's something they've not contributed to. Okay, now, at the risk of playing the devil's advocate for a moment, the fact that you're in small business and you've chosen to have a red hot go at it, and I know in your heart of hearts you will believe that your business is going to be successful, okay? The odds are stacked against you somewhat that you may not enjoy the business success from self-employment that you want, okay? Now so the reason I'm saying that is there's absolutely no guarantee in life that your business that you've chosen to begin and work very hard at, there is absolutely no guarantee it will bring you the riches and the rewards that you desire. Okay, a lot of people look at their small business as their superannuation fund and hope that the day they sell it, all their Christmases have come at once and they're going to be set for life. Unfortunately, that doesn't happen very often, and it's very, very upsetting and very, very confronting for people when they arrive at the end of their working life. They're unable to sell their business for what they really need for retirement, even though they've worked jolly hard and put in lots of time and effort and produced good outcomes for people. As small business owners, you must treat yourself as an employee of your business, and you must pay yourself super. It's the only way it's one of the only ways you've got to make sure you're going to be in a very good financial position when retirement comes along. The good thing is it's tax deductible, okay? Please, please, please keep good records about contributions you make into your super fund, so that at the end of the day, you can pay the appropriate amount of tax on super if there is tax due. Another thing that I love about super is that it's a way of giving you some very, very inexpensive insurance. Now, as I understand it, most superannuation automatically carries life cover, and it also automatically carries temporary and permanent disability insurance, and it can also provide for income replacement or loss of income insurance. Okay, now, whilst they are an optional thing in super, you have to opt out of them rather than opt into them. So they just come automatically whenever you've begun investing in super. Again, that's a discussion you really need to have with your accountant and your insurance broker if you've got one, because insurance is one of those things that we think we can do without it, and the moment you think you can do without it, you're probably going to need it. Okay, So again, that's something that's why I'm a big advocate of every person, be they self-employed or PAYG. That's why I'm a big advocate of every person, be they self-employed or PAYG, of having super, contributing to it on a regular basis so that you're going to build up that nest egg in case your business doesn't have the success you want. Righto, so that's that one there. There we go, very good. Okay, so what format should I keep my information in? Okay, so you can tell by my grey hair I've been around a bit, and I've been, as I said, I've been self-employed on and off for 30 odd years. And I'm a bit of a dinosaur when it comes to keeping data. I use an Excel spreadsheet. I wrote myself a little accounting program about 20 years ago, and I really enjoy using it because it breaks up all my expenses into about 150 different categories. So I have very good knowledge of when I spend money, where it goes. And I deliberately wrote the program back then because I didn't want to run a management accounting program for the business and a tax accounting program for the accountant. So I developed one out of Excel, and it records everything. And then at the end of the financial year, I simply cut and paste the information I know the accountant wants into a separate Excel page, and I send that off to the accountant. And then what his office does is one of the data entry people in his office take that information off of the Excel spreadsheet and put it into the accounting program that they use to generate my tax return. Okay, now, again, if you're very new to small business, whilst cloud accounting programs or accounting programs by and large are very, very good, you've got to make the decision whether that's an investment you need in this first 12 or 18 months, okay? It may well be the case that just keeping paper records or even doing some paper accounting and recording of your data is going to be enough and is a better return on investment for the first 12 to 18 months until you get going. The thing with, and I've been a victim of this because I was just being Jason and being a bit, belligerent about it, is that when the accountant's data entry person takes that data out of one format and puts it into another, I have to pay for that. So if you're doing paper accounting or accounting with a program or a method that the accountant doesn't use, you just got to be aware that you could be paying money for work that you could have done or could have been done better. So again, it's an opportunity cost thing you must understand here. Having said that, through the Business Leap program, I've had probably 50 or 60 clients in the last 2 or 3 years that have started business and they elected to go with a cloud accounting program straight up. I'm not advocating which particular one you should use, but I get very, very good reports about Xero and how friendly it is once you understand how to drive it. And I believe last year I was talking to my accountant and I could have bought a copy of Xero through him for about $29 a month. So that's $290, that's $350 a year. It's probably a trivial amount, okay, but still in all, I just, in the last couple of years, because we've been putting money into other things, I just didn't want to make that investment. But the thing is, today we're talking about your business. If you're a person that loves doing what you do, but you don't love bookkeeping, okay, this can often be a bit of a confronting challenge for people, is that they're not prepared to, delegate the process of bookkeeping to someone else, okay? Because we're watching the pennies, we want the business to be successful, we've just got to knuckle down and, 5 or 10 hours a week, we've got to sit there in the office and studiously enter all our figures, okay, so that we understand what's going on. Well, yeah, that's one thing you could do. And another thing that I recommend people do is, if you do not love bookwork, if you're not naturally a numbers person, okay, and you don't enjoy crunching numbers, there's no hard feelings about that. If that's the case you're in, I would encourage you to find a bookkeeper who you can have a very, very good relationship with, and you pay them to do the bookkeeping and you go out and do the things that you want to do. So for argument's sake, for Chris, who's on the call today, and she's developed this new business in training, okay? I'm pretty sure if Chris has gone and done that, she's very, very good at training. So my advice to Chris, if she asks for it, would be, you just go and be the best trainer you can be, focus your energies on doing that job very well and getting paid for it, and find someone that's a very, very good bookkeeper at a reasonably good price and let them manage the books for you, okay? Same with Clara, who's doing her business with the equine stuff for people, okay? Clara may or may not like crunching numbers. If she doesn't, my advice to her would be find a bookkeeper to do that, and you go out and do what you love doing and you're very, very good at, and just focus on those sort of things. A good book, and this is a bit of a side issue, a good book that I've recommended to people on and off for years is a book called The E-Myth, as in the letter E. It's written by a chappie in America called Michael Gerber. I think it's G-U-R-B-E-R, so The E-Myth by Michael Gerber. And he talks about the situation in business where you have a product person, so someone that's very good at making something or delivering a service. You have the money person who's very, very good at managing the money, and you have a marketing person. Okay, so there's these three different people that you have in the business. And you and I as a small business owner, somehow we've got to do all three of those things. Well, Michael Gerber said usually product people and money people can do those things together because that's how the human brain's wired. We can do product and marketing together, but marketing and money never go together because they use different sides of the brain. Okay, and it was a revelation to me when I read that book many, many years ago, because a very, very good friend of mine, when I left high school, went into business for themselves, and they went into panel beating. They started a panel beating business. Their father had been a panel beater and they wanted to be a panel beater. And after a while, they went out on their own. They'd done their training, became a panel beater. And then after 4 or 5 years, they were working bloody hard. They were doing big hours and doing very, very good jobs, and the work, you couldn't fault them. But the business wasn't really going where they wanted to. And I couldn't understand why this person, who was extremely good at panel beating, and they were pretty good at communicating with people and managing their staff, but the business wasn't paying. It's because they weren't particularly good at money management or that financial aspect of the business, which was a shame. And then eventually they got themselves a good accountant. The business grew enough that they could afford to have an in-house bookkeeper or accountant, and then eventually the business got a hell of a lot better. But there were some really tough times there because naturally I assumed that anyone that goes into self-employment is good at everything that they need to be good at, so the business can be successful. And that's not always the case. And I had to learn that lesson myself starting out. Whilst I had a bit of a love for numbers, it took me 3 or 4 years to wrap my head around how the whole process of cash flowing in and cash flowing out of the business worked. And it didn't matter how hard I worked out doing what I was doing, if the number part of the business wasn't working, there wasn't a chance in the world that I would have the success that I want. So my encouragement to you, coming back to this thing about the data format, have a look at where you are now, have a look at how much time and money that you've got to grow the business with, and decide if you've got the time and money to keep the data yourself. If not, find someone to help you with that. And it may be a struggle for the first year. I understand. I'm definitely not being flippant and wanting to spend your money for you, but I'm pretty keen that I want you to be very, very successful in this. So this is just some of the advice that we give. Right, so data format, that's a good one there. Let's have a look, we're getting here now. Okay, so we, as you would know, it's the 25th of May, so the end of the financial year is less than 37 days away. Now, Your accountant may well be under a fair bit of pressure at the moment because he'll have, most of his other clients would have rung him and sent their figures in 2 or 3 weeks ago and said, we need to do some tax planning so that we know what we're up for at the end of the year, and we need to know what we can do about it in advance. Okay, I really encourage all of our clients, regardless of how big their business is, that they want to meet with their accountant well before the end of May. They need to have had their figures for the year to date up to date, and a projection of what you reckon is going to happen in the business for the month of June. Okay, so you've got a very good idea of what the income's going to be, what the expenses are going to be, what the debtors are going to look like, if you need any new equipment or something needs to be replaced, and what your dreams and goals for the next 12 months are. You can sit down with your accountant when that data's assembled, and he can say, well, you know, you're going to spend X amount on taxation, you need to put some money into super. If we need to finesse a few things, we could bring some expenses forward, or we could make some asset purchases now. Okay. The worst thing that you can do as a small business person is at lunchtime on the 30th of June, you decide you're going to do some tax planning. It's too late by then, guys. This has to be a process that should start back in late March or early April, in that last quarter of the financial year, and you start getting things in order. And I often use a little story when I'm in training that, you know, we often, in this job and in other jobs that I've done, we've often come across families that are in business and there's a bit of dysfunction. And the reality is that we never talk about the hard things in life and business when things are going well. We never sit around the kitchen table or the dinner table on Christmas Day when everyone's having a nice time and talk about some of the stuff that should be talked about, because, you know, we're having fun and this is nice and we don't want to do that. Usually the time when people want to talk about the challenges that they're facing in business or some of the big obstacles they've got is right in the middle of something going wrong. And that's the exact worst time to be doing it, because you're not in a headspace where you can process things in a rational manner. You know, if you've got an enormous bill that needs to be paid and you're at threat of the business not making money and the landlord's demanding money and the cost of production's up and people are leaving you and there's something wrong at home, that's not the best time to be thinking about the future of the business. You need to be thinking about the business aspects of the business and the future of the business where you're in a nice, comfortable, safe, friendly place to do so. Having really good data, honest data that you can take to the bank, or it's courtroom proof, as I like to say, and making those decisions well in advance is critical. So that's why at the very least you should be having these business meetings with your accountant and your financial advisor and such forth by the end of May. So you've got all of June to put things into process. Now, a word of warning. If you're intent on investing or if you're intent on paying some super money into your super fund before the end of the financial year, I'd heartily encourage you to do so by about the 10th or the 15th of the month, because I know for a fact that all of the super funds have cut-off days where they will not accept deposits after that day. And I'm with Sun Super, or whatever it's called now, and last year I think the cut-off day for deposits was the 25th of June. And it would have been no good me on the morning of the 25th trying to, you know, send them a cheque or do an EFT, because it might not have got there on time, okay? As it is with a lot of other expenses, you know. Friend of mine last year, they've got a company and they have to register that company with the Securities, ASIC or whatever it is, and the bill was due on the 27th, okay? So they did the electronic funds transfer on the afternoon of the 27th, but the ASIC said they didn't receive the money till the morning of the 28th. So they fined them $80 because the bill was late, okay? So that's why I'm saying you've got to be a bit aware about all this stuff, because you don't want to have these avoidable little, they're not catastrophes, but you don't want to have these avoidable little hiccups coming along and buggering up your business plans. Okay. So the timeframes from the end of May, so that's good. Now that leads into what we're going to talk next about reviewing your figures. So I know there's a lot of people out there, and we've come across them, and some of my very good friends that are self-employed, you know, I love them to bits, but their business planning's, you know, a bit ordinary or perhaps non-existent. I make the time every month to sit down and look at what happened in my business for the previous month. And my wife and I do that together, and it only takes about 2 or 3 hours because we've invested the time in capturing data, making sure it's correct and it's easy to present. So for the fact that we can sit down for 2 or 3 hours once a month and look at what happened in the month past, what we think is going to happen in the month ahead, if things have changed a bit, you know, if we took a bit too long to sell some product, that means we might have to run at a small loss this month because the income's not going to come in for 6 or 8 weeks. That's okay. We know that in advance and we can plan for it. So this reviewing your figures from either a tax point of view with your accountant or from an operational point of view that you could choose to do it with your accountant on a regular basis, or you just make the time every month to sit down, look at your figures, see what's happening, be aware of what's happening, because it's no fun in business getting some nasty surprises and all of a sudden you've got a big bill and there's no money to pay them. That's just, in this day and age, we shouldn't be managing our businesses like that. Now, some of you out there that are doing are registered for GST and you're doing BAS on a quarterly basis, why don't you review the figures every quarter after you do your BAS thing? You know, as we said earlier in the program today, unless you're on 72 or 74 grand of income, it's not much point registering for GST. Okay, I'd still encourage you to do so because you can get that money back, so you've got more money in your hands to grow the business. Some people I was talking to, I think it was 2 or 3 weeks ago, oh yeah, that's my friend Tony, he's just changed from quarterly BAS back to monthly BAS because he's got so much stuff that he's purchasing for his business, and with the cost, with input costs gone up, he's spending a lot more money than he planned for. So he's gone to monthly so he can manage that stuff better. So that might be something you would consider doing. With regard to, just stick with me here, I'm gonna, yeah, okay. So that's what we're talking about there with reviewing those figures. And look, this could be the opportunity for you where you've got your bookkeeper. Now, as we spoke about earlier, the bookkeeper is the person that goes and does that work in the business that you may not be particularly interested in, okay? They produce the figures, they collate the figures, put them together in a way that you can understand them, and then you've got to do the management process of sitting down, looking at those numbers, deciding what they mean, how you're going to change them, how you're going to finesse them, how you're going to grow the income, how you're going to reduce the expenses, how you're going to grow the staff headcount, how you're going to train people and have it all work, okay? That's what we talk about with reviewing the figures. And that's why, you know, the big end of town is very, very good at doing this. The people that run big businesses, they may not be a numbers person per se, but they've got people in their business that are numbers people that manage the numbers and produce them so they can make business decisions around the numbers. That's my encouragement to you as a small business person, okay? You've got to have data and information and numbers so you can decide, you know, are we selling enough training programs? Have we got enough equestrian people coming through? You know, are we turning over enough plants in our nursery? Are we servicing enough cars? Are we putting enough people through art classes because we, you know, our business is in running art classes, and are we putting enough people through? Are we servicing enough cars? Are we selling enough product? Are people not buying our product because it's out of date? Are we not stocking the product people need? It's these sort of questions that you can answer by sitting down and doing this regular review of your figures. So regular planning meetings. Now, again, I'm never making suggestions because I want to spend your money for you. That's not what this is about. I desperately want you to be so successful in business that you can't believe you didn't do this sooner. I want you to be so successful in business that you're encouraging your friends and family to take up self-employment. I want your two big problems to be, how much tax am I going to pay and where am I going on holidays, because the business is just so successful. For that to happen, your behaviour is going to have to become very, very professional, okay? What I talk about with regular planning meetings is I really encourage people to have at least 2 meetings with their accountant every year, one about now or a little bit earlier in preparation for tax time, and one back in the middle of the year, okay? If you have a financial advisor, it's not critical that you have one, but if you do have one, you probably want to meet with them at least once or twice a year just to see how things are going and to find out some new information that you can put into your business. If you have an insurance broker, I really, really encourage you to have a sit-down meeting with your insurance broker once a year, well before the insurance is due. So we have to have farm insurance for our farm in case the cows get out on the road and hurt someone, okay? And that's usually due in the end of January. So usually in November, we either have a phone meeting, or if we're down the coast, we'll go and see the insurance broker. You know, we might take them out to lunch or a cup of tea or coffee, and we'll sit down and have a chat about our insurance needs to make sure we're going to get the best deal, okay? I like long-lasting relationships with people, but I'm not going to do it I'm not going to do it at my expense, okay? My insurance broker knows that I'm going to be seeking a few quotes. I love working with that person. She's a lovely lady and she's been very, very helpful to us, but still and all, that's not enough. She must be competitive, and we must make sure that we've got the appropriate insurance for everything. We don't want to be underinsured. We don't want to be overinsured, okay? So that's the thing with the insurance broker. Now, some of you may or may not use a solicitor in your lives, in your business, and if you don't, well, that's okay, but at some stage in your life, you'll need a solicitor. It may well be worth every year you just having a catch-up meeting with a solicitor to keep them appraised of what your business is doing and how it's going, okay? Now, the reason I'm making these suggestions is I'm not doing it to spend your money, but I treat those people as part of my business team. They're there to focus on the very, very important things that they are good at to help me be the best business person I could be. And the only way I've found to do it successfully is have these regular meetings with people so we can talk about the business. I can learn new things from these guys, these people. They can help me with problems I might be having. They can offer new insights. They may even be able to offer me new markets or new ways of thinking about the business, okay? It's very easy for you and I as self-employed people to sit at home in our office and focus on the things that are most important to us and just work jolly hard, okay? Hard work is very, very important, but the figures and the data and the information around your business are equally important, and you need to manage those as well as you manage yourselves and what goes on in the business. Righto, guys, if you want to have a chat about anything to do with your business ideas or what's happening in your business, we'd be very happy to have a chat.